Monday, November 15th, 2021, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the dollar. Most people think they know what a dollar is. They take out a dollar bill from their wallet and show it and they say that's a dollar. Most people think the dollar is the currency of the United States, the Federal Reserve notes. But it isn't, technically. What we have today as a dollar is an imposter. It's not a real currency. It's not backed by anything. It's a I owe you nothing, as John Exter said in 1972. And I want to talk as well about the idea now that the dollar is going to go through the roof, that it's going to destroy all the current ideas about things in the markets and asset classes, and that it's going to kill inflation like this guy thinks. I want to try to convince you that the dollar index and the movement of this imposter dollar are just distractions. The dollar is moving against other trashy I owe you nothing currencies. So before I start though, I wanted to show you what a real dollar is in terms of silver and gold. And I do accept that the name dollar is derived from the Spanish dollar, which was a silver coin, and the Spanish dollar, of course, was a creation and derivation, so to speak, of a Bohemian silver coin, the taler, right? But that's a dollar here. This is a 1924 silver dollar. It was legislated as well into existence by Hamilton, Alexander Hamilton, through the Coinage Act of 1792. There have been adjustments to the weight of the dollar in terms of silver and gold as well. That's an 1853 dollar. So those are real dollars. There's the gold silver ratio. It's around 15-16. But what we have today is nothing like what we had prior to World War I, when we were on a sound money basis. Yes, there were exchange rates between countries' money or currency, but they were just exchange rates based on the weight of gold and the denomination of the coins. For example, a sovereign was a pound, and that sovereign was pretty much the same weight as a $5 gold coin. So that's why the exchange rate between the pound and the dollar stayed at 4.86. That's the exact exchange. It stayed like that, fixed for most of the 19th century and up until the beginning of World War I. So those people who are saying now that the dollar is strong, yes, it's strong, as I said, versus other fiat currencies. And the kind of foreign exchange market we have today, where currencies float against each other by the second every day, is a total anomaly. It's, I would say, monetary abomination. It's the same. I'll give you an analogy or an example of that, what it would be for other measures or weights. It's like saying that the pound, the kilo, or the stone that we use in the UK would be traded every day, fluctuated every day. Can you imagine the mayhem it would cause in daily life? Can you imagine if the mile or the kilometer changed every second? Is it any wonder that our economies, our monetary systems, our financial markets are so volatile and so troublesome? Is it any wonder that we have so many crises when the standard of value or the money that we use has no set value? It fluctuates like crazy. No, it is no wonder. And as I said, it's an anomaly. And it's been an anomaly since 1973. Yes, 1971, Nixon took the dollar off gold, but they try to maintain the fixed peg between the currencies up until 1973, and they had to give up. And why do they have to give up? Well, because there was no standard of value underneath those currencies. There was no gold, no fixed gold value. So when you can create currencies out of thin air, different countries will will try to print as much as possible and try to get away with it. It's a race to the bottom. So the dollar index was created basically to measure this race to the bottom. So that's why I think it's important to always go back to the history of things. Not just say, oh, the dollar index is very strong. That means the dollar is doing really well. So let's look at the history. USDX started in March 1973, soon after the dismantling of the Bretton Woods system. Yeah, they tried for 2 years. It was an impossibility. And then we had people like Milton Friedman, who I respect some of his views, but his views on this crazy floating exchange rate system was that it was the free market. But it's far from that. It's a crazy abomination. That's what it is. It's not honest weights and measures. Have you wondered why there's so much trouble in terms of trade deficits, current account deficits? You have countries like Argentina, Brazil, and many others. There's always a currency crisis. Well, because the system is totally unanchored. It's based on nothing. So the dollar index started at 100, as it says here. And yes, the currencies have changed only because the euro came into existence in the late 1990s. So the euro is just an amalgamation of the old currencies, the national currencies of Europe. So the dollar index hasn't really changed. It used to have, of course, the Deutschmark, the French franc, the Dutch guilder, Italian lira, but it started at 100, and right now we're at 95. And gold in 1973 was trading under $100, and now we're almost at 2,000. So that is a distraction, the dollar index. And yes, the dollar index has rebounded, but gold has rebounded even more. We are seeing gold break out versus all other major currencies as well right now. And the other thing I would say, if you go back a little further to, let's say, 2008, that's when the dollar index hit its all-time low at 70.69. And that was March of 2008. At that time, gold made an all-time high at 1,031. So here we are now, 35% higher in the dollar index at around 95. You would think that gold would be trading below 1,000, but no, we made a new high in 2011. We made a new high last year, and right now we're knocking on 1,900 again. So gold has been up 80% since 2008, and that's why I say the dollar index is a distraction, because the so-called imposter dollar has no real value, nor do the other fiat currencies. So the dollar index is a measure of sinking currencies, and that's why we need to focus on real money. And one thing I would say to the individual who said that the strong fiat dollar is going to destroy inflation is wake up before it's too late, because it won't. The gold and silver ships are not going to sink, and you'll be fine. So with that, let's quickly look at where the markets are this morning. It's 8:20 a.m. London time. We've got spot gold at 1862. It's down just over $2. The range has been 1869.60 and 1856. Spot silver is trading 25.18. That's down about 12 cents. High's been 25.40, low 24.90. What about the stock markets? Well, the Dow future is down 16 points. NASDAQ 100 future is up 0.2%, or up 34 points. The S&P 500 future is up a couple of points. The FTSE 100 is unchanged. To the fiat currencies, to the sinking currencies. And this is something crazy that, and I know I update them every day, but prior to 1973, basically, they were all fixed. And there were devaluations once in a while, because countries did cheat under the Bretton Woods system, but they were like years apart. So sterling right now is unchanged, 134.15. The euro is up slightly, 114.50. The dollar is unchanged versus the yen, 113.89. The dollar has drifted lower in the last week versus the yuan. I think we reached like 640 last week. Right now, we're at 637.60, down slightly overnight. To the other major currencies, we got the Aussie dollar up 0.25% versus the dollar at 73.53. The dollar is down about 1/8% versus the Canadian dollar, 125.32, and the Kiwi dollar is up 0.2% at 70.55. WTI crude is down about 0.8% at 75.25. High-grade copper is down 0.5% at 4.42. Natural gas is up 0.5% at 4.86. Yesterday I spoke about commodities, the soft commodities, during my live stream. We need to wait until the open in New York, really. Everything is pretty quiet right now for the soft commodities. I will keep you updated though about coffee, wheat, cotton, and oats. They're going up quite a bit, or the dollar is going down quite a bit. So to finish off, let's quickly look at the 10-year yield. It's down actually 4 basis points overnight, which is a fairly big move. We're at 1.55%. And just before I finish, just wanted to say, I saw an article here in the FT. Janet Yellen, the U.S. Treasury Secretary, was, I think, yesterday on CBS Face the Nation, and she blamed the pandemic for inflation. Yeah, that's par for the course for a statist, because she is a statist and a central banker to boot. So blame everything but themselves. Okay, so if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great start to the week. Take care. Bye.